Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. With NVIDIA earnings now in the rear view and stocks at record highs, what is the best strategy now for your money? We explore all of that with the investment committee. Joining me for the hour, Josh Brown, Joe Terranova, Sarat Sethi, and Bryn Talkington. Whether there's an AI bubble or not, we'll explore all of it, 12:30. Make sure you're around for that. But, Josh, let's open it up here. So we're at record highs, GDP revised up, financials at record highs, the VIX is at 14, NVIDIA beats, stock action, price action's pretty muted. What's your take?
I think NVIDIA was a $150 stock at the start of the summer, and now it's $180. Historically, recently, the pattern has been that the stock runs up into earnings. It's not a post-earnings reaction story. It used to be, but things change. I think everyone understood this would be a good quarter. I think everyone understood the asterisk was around China, but that largely they had figured out the tax ramification, and we had no idea whether or not there'd be sales in China for next quarter. I think that was like the noise. The meat and potatoes here, the actual signal, the thing that matters. The CFO came on and talked about $3 to $4 trillion in AI infrastructure spend between now and the end of the decade, or whenever the time frame was. And if you're focused on that, you're not worried so much about how the stock traded 5 minutes after the report. So that's where I am with this name. I think it wants 200. I think it'll get it. And everything that you were worried about, if you were worried about the CapEx environment, I think should have been allayed, at least for the time being.
Okay, that's a good summary of how you feel. And Bryn, I'm not going to go as deep on this as we otherwise would, considering that Gerstner's going to join us at the bottom of the hour, and I want to save a lot of the meat of our conversation for that. But I do want your take. I want your take on the price action today. I've got Ives is bullish. Rascon raises his price target. And by the way, he's going to be on the closing bell with us. That's his first reaction to the print. And then you have Seaport today sticking with a sell rating and a $100 target. While it leads the market, it being NVIDIA, it's seeing real constraints on its growth. The company will struggle to deliver upside to numbers this year. Aside, of course, they mentioned from the wild card of China. They have the only sell rating on the street. What do we think coming out of this number, what it means for this market now?
I think Josh covered the price action perfectly about what's happening. Stacy asked great questions on the call. I don't know who Seaport is, and so I'll stick with Stacy upgrading to over 200. I think, though, where you have to think through this $3 to $4 trillion spend, which I'll just spend a second on it, is that Colette said by 2030 over the next 5 years, and one of the analysts actually asked the math around that equation. And so what's interesting is total AI spend, infrastructure spend, has doubled year over year to $600 billion. And so they took that $600 billion multiplied by 5, added a little bit more to get that $3 to $4 trillion. I do think my one thing you should take away from this is they're very concentrated in their client base. And so I think that you're going to see a ton of spend from the hyperscalers. There is a high amount of concentration. And I do think China is actually more of an upside than a downside, because they're not having any of those numbers factored in.
Just on that, since you raised the point, I want to inform our viewers on what you're referring to. I thought Christina Partsinevelos flagged this as a wow. That's an eye raise, Joe. 3 customers for NVIDIA now represent 23%, 19%, and 14% of the company's accounts receivable. That's up from just 2 customers at 17 and 16% respectively back in January. This is a company that is super dependent on a very small number of very big buyers.
Yes. So I guess there's concentration everywhere, isn't there? A problem at some point, potentially, but not for today. For the market, this is a great example of just carry on. Volatility reaches its lowest level in 2025 today, as recorded by the VIX. I think what's interesting that we have not yet mentioned is that the uptake on Blackwell is incredibly strong, probably stronger than we expected. And in addition to that, The buyback story is remarkable, and the buyback story
60 billion
extrapolates even further into the overall market itself. Barini Associates puts out a report that says we've reached $1 trillion in buybacks already in 2025. That's the fastest on record. The top 5 companies in buying back their stock have already bought back $320 billion worth of stock. So whether it's Apple, Alphabet, or now NVIDIA, that seems to be a common theme, and that's exuding, you could say they're wrong in their buybacks, but they are exuding confidence in something about the environment.
Sarat, let's do the read-through then for the market. UBS today says the overall strength of the quarter may offer some reassurance for investors after signs of stalling momentum for large cap tech. And if you look at the month to date, the stall shows itself. Right. Mega caps month to date. I just take out Apple because it feels like it's a different animal in this conversation. Alphabet's had a great month. It's up 10%, but NVIDIA's only up 1%. Amazon's down, Meta's down, Microsoft's down. Do we get some reassurance? Do we feel better about where we are?
I think you do, because what you did not hear on the call was that the hyperscalers were slowing down. And that would have been a second derivative of slow down, because they would have seen their customers slowing down, and especially since NVIDIA is one of the last biggest company to report earnings. So that gives you some confidence that their customers are still seeing demand. They're still investing. They're talking about how much more that's going to be in the future, which means that the demand, not just for these products, but all the other businesses that NVIDIA is now growing into, it's data centers, it's the gaming, it's all the others are now firing on full cylinders. So I think the opportunity and the total market, addressable market, keeps growing for them.
We get a take from Baird today too, Josh, which says the ROI and the narrative around ROI, return on investment, of AI is getting less fuzzy. Quote, we believe that further evidence of positive ROI will lead to more allocation enterprise AI budgets, although importantly at a pace we expect to be slower than some of the hype community, the hype currently suggests. What do we do with that? Alphabet, I mean, by the way, Google, they're investing another $9 billion. Another $9 billion in AI infrastructure in Virginia.
Yeah. There's a cottage industry of people who want to naysay and talk down the impact of AI for various reasons, some self-serving, some political. But in the end, this notion that it's 3 customers, 5 customers, it's almost nonsensical. There are 7 billion internet users. All of them are going to be engaging with AI software, AI services, agentic AI. Those are the customers. So the hyperscalers are basically a conduit to get NVIDIA's technology in front of 7 billion internet users and millions of corporations and enterprises and governments and other organizations. Those true customers, the end users, don't go directly to NVIDIA and say, hi, I'd like to order 3 GPUs, please. So it's a stupid conversation, and I don't think concentration risk here is the issue. I think the bigger issue is that this is now too big of a business for it to be immune to like a true economic slowdown. It's very pro-cyclical. There's just no way on earth, if Alphabet, Amazon, et cetera, endure a sustained drop in share price and profitability issues in their core businesses, that they'll continue to spend at the rate that they are. So if you're in this because you think it's a secular trend and it can defy the larger economic forces of recession, et cetera, you're in for a rude awakening. It won't work out that way. NVIDIA crashed in 2022. I think it was a 70% drawdown. Yeah. There's just no way that you can say this thing is immune to the economy. So if you want to think about the risk here, it's not customer concentration, because again, the whole internet is being redone in AI. The true risk here is the same risk you face in any other stocks, which is economic risk. It's a huge story, but it's not immune.
Well, I was also going to say the customers who can't get the chips right now, when they will get the chips, they won't want the chips, because that's going to be the economic slowdown.
You're 100% right. That's a bad signal. Right. You don't want to hear that,
so all of a sudden
chips are plentiful.
Well, the double ordering stops, and then the customers will say, I'll go to your secondary chip, not your primary.
All right, a reminder again, as we move from NVIDIA, Brad Gerstner, bottom of the hour, as a CNBC exclusive, we get his first take on his biggest position in this market. Let's move to, I guess there were some questions going into NVIDIA's report. There were definitely questions going into CrowdStrike's report, right? Especially as we question software overall. They beat. Their guide was lower, though, than expectations. we take a look at that CrowdStrike, guys, please? Let's look at the chart.
Let's look at the chart, because the chart tells you everything about what is going on today.
Well, now it's
look
up.
at what this. Yeah, that's right.
Could we get a broader thing to show you what happened post earnings?
So if we're able to, when we're showing the charts, include the 200-day moving average, what you'll see is that this morning the low for CrowdStrike went exactly down to that 200-day moving average, and it held. And what it did from there was it reversed higher. It's tracing out a very powerful technical signal right now. It's called an outside up week. That means you trade below last week's entire range, and now you are above last week's entire range. That's a signal of exhaustion. Scott, you hear us talk all the time about good news and bad price action. This might be an example of bad news and good price action.
That's a sign of a pretty good market that you're in. Yeah. If you deliver, if you deliver results, Josh, that are deemed to be a disappointment, but yet the price action is that, that ain't a negative.
Yeah,
that ain't a negative.
It's a great point, and I love scenarios like that, but I don't think that this should be characterized as a disappointment. They beat on the bottom line, they beat on the top line. They beat earnings by 10 cents a share. And I think what people are saying is that they're surprised that they're not seeing higher upside guidance, given how incredibly well all of the segments of the company's business are performing. The stuff going on with Falcon, with Charlotte, with all of these new services that they're rolling out, AI for the agentic age, et cetera, all of the superlatives, all the numbers, all the year-over-year ARR growth, it's literally off the charts. So I think analysts were just saying, this might be very conservative guidance, and maybe they're concerned, why is it conservative? If that's the only negative you can take from CrowdStrike, then you understand the price action Joe's describing. I saw it down 7% last night, and I laughed. I said, what Muppet algorithm was programmed to sell this name after hours?
Hey, man, there have been some questions and legitimate ones about this space. We already know that the ETF that tracks all of this is having its worst quarter since 2022. Let's add that to the context.
And that's a dynamic coming into this, is that the cyber names have been down for the better part of the last 6 weeks while the market is rallying. So you have to include that in the narrative of what we witnessed here post-earnings, where you're seeing this intraday reversal and it's moving higher.
Net new ARR for fiscal year 26, 40% growth projection year over year.
And that means margin expansion, which is
free cash flow margin expected to reach 27% Q4, 30% for next year. Like, all of the metrics that you would care about in an ARR business are going in the right direction. It's the clear industry leader, at least in my opinion it is, and people are going to want to own this stock. And I looked at that reaction last night. I said, this is a clown show.
I mean, I give you quarter to date, right? Fortinet's down 25%. This name down 15.5%. Checkpoint 13%. Zscaler. All the headliners are lower. By the way, George Kurtz, another exclusive to tell you about with Kramer tonight, Mad Money, 6 o'clock. He's the CEO of CrowdStrike. Bryn, you own the Bug, right? Isn't that you?
Yep.
Worst quarter since 2022.
So all these conversations around ARR with CrowdStrike are great. Where did this all start, though? Really go back to August 7th, when Fortinet released. That stock was down, I think, around almost 30% that day, like 25 to 30%, because around ARR, that actually revised guidance down by, I think, 50 million. And so I think that somewhat sent ripples. Has there been an over purchasing? And so you get this growth scare within this secular space, that you have this cyclical concern around that ARR revenue. And I feel like that's the only reason why today CrowdStrike has a muted return, is because still have that overhang, but the numbers don't bear that out. But I do think that when you get those concerns around ARR, like Fortinet, which reduced it by 50 million, you're going to get just a bloodbath in the names. And so I think until that growth scare goes away, there's still going to be an overhang, which is a good opportunity to add to these names longer term.
Let's talk about a stock we haven't talked much about lately, which is kind of surprising to say given how big it is. Tesla. When was the last time we talked about Tesla with some substance on this show? Now, that stock has quietly had a pretty good month. It's up 11% this month. And speaking of quietly, maybe that's the story. Maybe because once Elon Musk left the government and he went back to his day job investors have felt better. There hasn't been a lot of noise. Sure, the sales numbers have been bad, down 40% in Europe. BYD's tripled there, so there's still global issues with Tesla's sales, potentially as a result of what Mr. Musk has done in the political arena. But, Bryn, what about this one? It's at 11% this month. I feel like we haven't talked about it in a while, and maybe that speaks to the environment that this stock and Mr. Musk himself have gotten themselves into more recently.
Well, you know, I remember we talked about it at least around 6 weeks ago when Elon came out and said he was going to start his own political American party, and the market's hair got on fire, and the stock was down about 10% that day to around 293. And remember, I talked about it. I said, I'm going to buy more here at 293. And I'm going to sell the August 22nd calls at 320, and I got $14. And look, so that stock got called away, that position. But this is, to me, a great way to play the stock right now as it's in this transition. Because when you have the fundamentals, which I've said a bazillion times, the fundamentals, you have lower revenues, lower earnings. And so you just have to, it is what it is, okay? And so until that changes, I still feel the stock's going to be in a very strong channel between like 290 and 350. And so to me, that's where I look to add to the position. There's a huge call premium because I think buying the stock and selling calls, you've made a lot more money than just a buy and hold in this over the past 2 years.
Let's talk about other stocks that are in the news today. We've been watching the vaccine makers all day, many of which are lower, Moderna, Pfizer, and that's given the continued upheaval by the HHS secretary with the CDC and the undeniably more hostile stance that he has maintained on vaccines in general. My question to you, panel, are these stocks investable, Surat, or untouchable? Because you've got Merck, you've got J&J, you got GSK. Investable or untouchable?
I think if you look at where we are for the next couple of years, if you just isolate the vaccine part, that part's not investable. But the other parts of the businesses at J&J are very strong. Okay, and Glaxo has other businesses as well, so does Merck. So you're getting negative value. You're not even getting zero value for these businesses. What you just have to kind of wait out is what happens when you get another administration and or a turn of events at something happens.
That's the investment thesis? Just wait it out till you get another
No, the investment thesis is that science will tell you that some of this stuff does work, and right now the administration says it doesn't. So
hang on a second real quick. It's a big week for retail. Bryn, what do you got? Final trade.
KKR, the stock sold off about 10% after earnings, strong growth. I think it's a good entry point here.
Surat.
Schlumberger Oil Services revenue is going to increase. The stock is so out of favor. I think this is a good buy.
Joe T.
Bunch of financials making 52-week highs today. Synchrony Financial is one I really like.
I mean, that's been a trend of late, hasn't it? I mean, the
Goldman
space.
Sachs.
Best stocks in the market player, too, Synchrony. It's on there.
Oh, you had a new one today, too, which was not a new one. You want to talk about Interactive Brokers. That's one you highlighted
Interactive Brokers,
before.
which we highlight in the 50s, is now in the 60s, crushed earnings, and was added to the S&P 500. I think that thing is breaking out, and we're still keeping it on the list.
And you're kind of defending CrowdStrike as your final trade, yeah?
Don't really need to. Unbelievable report. Best CEO in the space, and staying long. I think it's an amazing long-term hold.
All right. An adventurous show, to say the least. I'll see you on Closing Bell.
Hey, I'm George. This is Blue Cloud Trading, and it's Thursday. It's August 28th. It's almost 5 p.m. as I'm recording this video, Eastern Time. And another up day for the markets. Let's take a look. Here's, by the way, Josh Brown was on the halftime report earlier today. They gave us a number of stocks to take a look at from the show. We're going to actually look at about 11 of those stocks. All right, you can see the list right there. We'll take a look at the S&P 500, the SPY, the QQQ, the Dow Jones ETF, the Russell ETF, the Euro Stocks ETF, FEZ. We'll take a look at some of the Mag 7 stocks like Tesla, Apple, Meta. We'll take a look at some of the strongest sectors. And we've got a couple of requests from our members. So if you become a member, you can also put in a request for a stock to be analyzed on the show. Pretty cool, right? I think so. So let's do this. first we need to do the following. We need to take a look and see how the markets performed. All of them were up. All indices were up today. The Dow was up 0.16%. All right, it did drop a little bit in the morning. Then around 12 p.m., it recovered. NASDAQ did the same thing, recovered around 11 a.m., up 0.53%. Same thing in the S&P 500. Okay, up 0.32. And the Russell 2000 actually was only up 0.12. It was pretty flat for the most part, as you can see. All right, let's take a look at the heat map. That's important. And we're looking at the one-day performance here for the S&P 500 stocks like Broadcom, which was up 2.8. Google was up 2.0%. Amazon was up. Apple, Microsoft, most of the technology stocks there, like Palantir, was up. Berkshire was up 0.83. Utilities did not do so well. You can see a lot of red right there. Same thing with the healthcare stocks. Consumer defensive also did not really pan out so well, except for Philip Morris. People are smoking a little bit more, apparently, or using their tobacco products. Tesla was down 1.03%. Let's take a look at the groups, which is the sectors, and which sectors were strong, as you can see it here. Clear as day for the daily chart. We've got ourselves the communication services were up 0.94, then technology and energy, and then there you can see utilities, consumer defensives, and healthcare were down. This is the 1 week performance with consumer cyclical at the top, consumer defensives at the bottom, down 0.29. Consumer cyclical was up 3.55, then technology and energy. For the 1 month performance, it's basic materials, communication services at the top, utilities and consumer defensives at the bottom. Looking at the 3 month performance, technology is the number one sector to have been in, and for the half year performance, also technology up 20%, healthcare down 6.53. All right, let's take a look, guys, at the let's look at the SPY ETF. We'll start off with that one, and then we'll get into the rest of these stocks. And we're using our favorite indicator. I think you all know what that is by now, at least the people that are watching this show and following this channel. Ichimoku, a Japanese indicator originally incepted in the late 1930s. That's right. Published in the late 1960s. And let's get rid of that line there so you can see the glory of the Ichimoku. All right, and it was brought to the U.S. and the West here in the 80s. I think that's around the time that they started utilizing this fantastic indicator. Why is it special? Well, a couple of reasons. One, you get an Ichimoku cloud. Go ahead and try to find another indicator that has a cloud. You won't find one. And what's interesting about it, it actually projects into the future. Okay, 26 periods into the future. What's it based on? It takes calculations. It takes the midpoint. So the cloud itself is considered is the Synchrospan A. You get the Synchrospan B, the purple line there. How is it calculated? How do they project this and plot it on the charts? They essentially take the 9 period. Okay, now that is called the Tenkan-sen, and that's the high and low divided by 2 of each and every of the last 9 periods, or 9 candles, or 9 days, if you're looking at a daily chart. And that's where you find that green line. The red line is the 26 period, the highs and lows divided by 2. All right, the midpoint, that's why it flattens out sometimes. As you can see there, you'll have a flat moving average, which makes it even stronger level of support if price happens to be above it. Another part of the indicator is the Chikou span, that white line right there, the lagging line. It's projected 26 periods into the past. All right. What is it based on? It's actually today's closing price, projected 26 periods into the past as a line. And then you look to see where that line is in relation to the candle 26 periods ago. If it happens to be above that candle 26 periods ago, that's very bullish. If it's not, it's bearish, like down here. All right. So you can see we had a downtrend right there when the Ichimoku Chikou span there, the Chikou span line was under. I've also superimposed the 200-day moving average as a dotted yellow line just as a reference point. And then just real quickly, the Synchrospan A is calculated by taking the midpoint of the 9 period and the 26, projecting that 26 periods into the future. That's where you'll find it. Okay. And the purple line is based on taking the highs and lows of the last 52 periods. Okay, so the high and low divided by 2 of the last 52 candles. And then instead of projecting it under like a 50-day moving average typically would, right, it actually projects it into the future. So that's really unique, different. And guess what? A lot of financial institutions use it. I know Tom Lee's technical strategist, I forget his name. I always forget his name, but he uses Ichimoku. I've seen him utilize this as one of the indicators, and it's becoming a more and more popular indicator. And it's really easy to read once you understand the rules of it. And all we need is basically price. Okay, these Japanese candlesticks here to be above the moving averages, above the cloud. You got a bullish trend. If it's under, it's bearish. Ichimoku stands for at a glance. So quickly we can assess what's going on here with the SPY. And as you can see, it's a very strong uptrend. Let's take a look at the rest of them. The QQQ ETF, same situation. Right? Price is above the cloud and the moving averages. Very bullish. It was up 0.63% today. How about the Dow Jones? Same thing, right? Looks good. Looks strong right now. Still moving up 0.17%. How about the Russell 2000? IWM, also looking very strong. Okay? So we're looking at a daily chart here. What about the VIX? The VIX is the indicator that represents volatility in the markets. Okay, so the market volatility index. And if that is declining, that's a good thing. We want to see this always in low levels. Under 20 is ideal. Under 25 is fine too. But once it starts to spike, like it did back in April, right, when we got that announcement of the tariffs, early April, you saw how it jumped, all right, about 100 and, I don't know, from that level right there, for example, it moved up about 129% in 5 days. That's not good. That early April spike that was caused by the announcement of the very large tariffs, which ended up not going into effect, right? They were postponed, which is what led to the VIX dropping, as you can see right there. And then the markets cooled off a little bit and they stabilized, right? Because the tariffs didn't go into effect. And we can see that, of course, if all we got to do is look at the SPY ETF. Here we were in April. This is that big drop. Bam. Where it dropped about 15% in a matter of just 5 to 6 days. It was crazy. And then we've had this big recovery since then. All right, so how about FEZ, the Eurostoxx 50 ETF? All right, this is also relatively bullish, but price is under the 9 period still. So we don't have all of the elements of the cloud looking bullish yet. We also, the Chiku span is also inside the candle here, so that's also not bullish quite yet. But the Senko span A is above the Senko span B. That's positive. We're above the 200-day moving average. Overall, it looks pretty strong. What about, if you ask me, where I'd want to put my money, I'd be putting it more into these ETFs versus the FEZ at this time. So I've put a little blue flag to associate strong technicals on both the weekly and the daily. If I show you guys what the weekly looks like on these, here, let's switch it over. Here's the weekly chart, very bullish. The Qs, very bullish. The Dow, very bullish. Russell 2000, very bullish, right? Recently, the Senko span A crossed above the Senko span B. The VIX, forget about that one. That's the volatility index. FEZ, Eurostoxx, looks good too on the weekly chart, okay? But we don't have confluence or confirmation on the daily. That's why I did not get a blue flag. All right, let's take a look at the stocks they talked about on the show, in the halftime report. And there was only one out of the 11 that has perfect technicals on the Ichimoku for both the weekly and the daily, and that's Synchrony Financial. Okay, in the credit services sector. You can see here, very strong uptrend. This stock has been moving up for quite a while. From these lows back here, going back to April, it's moved up 88.8%. Here's a daily chart, very strong. Okay, so I like SYF. The directional movement down here, if you're interested in knowing what that means, real quick for those who are new, the green line is the positive DI9. The red line is a negative DI9. If the green line is above the red line, that's bullish. If the red line is above the green line, like it was over here, it's bearish. Okay. The white line represents the ADX, which I have at a setting of 9. If that's moving up, that means the momentum is increasing. And you can see that in the price. So this is bullish. This is what you want to look for. Green line that's moving up, red line moving down, and the white line moving up. That's bullish, like it was over here. You can see how that led to a nice move. All right, let's look at the rest of these. Like I said, there's something off about these, and that's why they don't get a blue flag, in my opinion. And I would personally not be adding any of these positions at this time, maybe in the future. IGV is one of them. On the daily chart, it's inside the cloud. It's under the Kijinsen, the 26 period. No on that one, okay? You also have the faster moving average. The green line is under the red line. No, okay? What about, and what does that mean? It just means that we're in a decline right now. You want to jump in? How do you know that this is definitely going to turn around? I mean, it did break above the cloud today on the daily chart. Currently on the weekly chart, it's under the Tenkan-sen, so I just don't like it right here. Chikou span is still underpriced. And the cloud, the future cloud, look at it, bearish, right? Why? Because the Senkou span A is under the Senkou span B. That's all. Let's take a look at CrowdStrike. Yes, it had a big day today. It was up 4.59%. We created a bullish engulfing pattern right there. A bullish engulfing is when you get a small candle, like this one right here, which happened yesterday, followed by a much larger one that engulfs the prior candle, okay? So, and as I've mentioned before, that's here on our cheat sheet. You can see it under the double candle patterns. There it is. Okay. Whoa. That's another picture there. Let me get rid of that. Okay. So that is bullish, and it did actually stall. Yes, I'm sorry, today at the 200, and we had that nice big move up, 4.59%, and it could certainly lead to a move up. But we've got resistance at the Kijinsen, we've got resistance at the bottom of the cloud and the top of the cloud. The cloud is still bearish. Chikou span is underpriced. Therefore, the rules of Ichimoku state you should not be adding positions in this scenario, basically. But everyone can do whatever they want. It's a free country, folks, still, at least for now. What about Global X cybersecurity on the daily chart? It's under the Ichimoku. It's under the Ichimoku. No on that one too. FTNT under the Ichimoku. No. mRNA, Moderna under the cloud, under the 200. See how the 200 is still declining. So not interested in that. It can stay in these extended periods of time for sometimes years. Like you can see here, it happened going with Moderna, for example, right? Had its day back during the COVID, our COVID experience, right? I'm sure you guys still remember that nightmare. And you can see back in 2020 how it reached a level of about $500. And if we have another incident like that in the future, I'm sure this stock will do quite well, and company will do well. Or some other instance where we need more of those types of shots. But right now, you can see it's been in a decline since 2024, May of 2024. It's actually declined to 85% since then. And it doesn't look like it's got anywhere to go here, except for sideways for a little while. There's no reason to be buying it. It's out of favor. It's not a demand. There's no demand for it. And if you want to buy something that's out of demand and there's more supply, good luck, right? Here's Merck. Under the 200-day, declining. Okay, moving average right there, the 200-day moving average. It came close to it and then declined immediately. No on Merck. It is above the Ichimoku cloud on the daily, but if we look at the weekly, still under. And my suggestion would be to look at both time frames when you're trying to make a decision about buying a stock or adding to your portfolio. Make sure that you got confirmation on both of the time frames. That's what I do. Those are the types of stocks that I share in the members-only videos that I do each weekend. You can find those videos, those member-only videos, on my homepage here on YouTube, Blue Cloud Trading. Okay, all you do is just kind of scroll down. There they are. In order to watch them, you do have to become a member. How do you become a member? You hit the link right here, which says join. Click on that. And then a little pop-up will happen here. You can become a Blue Cloud supporter. You won't be able to see those videos under this level, but you would be supporting the channel, and that's much appreciated. In order to view those videos, you would have to become a Blue Cloud trader. Okay, the next level up. So that's when you get access to those perks. And then if you want to go one step further, Blue Cloud Legend, You'll get daily trade updates on the stocks that are in my portfolio. I share that in daily posts. You'll also find some day trading videos there. You'll also get those exclusive member-only videos. The posts you'll find once you become a member. All right, let's continue, folks. Let's get back to what we were talking about here. We were talking about Merck. No on Merck. What about Johnson & Johnson? Well, this is a stock actually. Let me just show you guys some notes here that I added back on August 1st. I closed out of it actually on Tuesday, August 26th. It dropped under the Tenkinson there. I got out for a 5.8% profit. It's still dropping. And basically in those member-only videos, I talk about why I'm adding positions, why I'm closing out of positions. I also share up to 20 new stock ideas, additional stock ideas for the upcoming week. I think that's the most important part of the member videos, because I've like basically screened through the strongest sectors, strongest industries to identify those stocks, and then I share those with the members. GSK. So Johnson & Johnson right now is pulling back a little bit. It's still strong on the weekly chart. It's above the Tenkinson Kijinsen, but you can see there's a bearish engulfing pattern that's still, get rid of that. That's an old thing there. It's creating a bearish engulfing on the weekly, so it's looking more and more bearish. It's far away from the Tenkinson and Kijinsen at this point. So yeah, I don't think this is this could continue to pull back further. GSK is on the daily chart is under the Tenkinson. What about the weekly? It's above the cloud, but it's not looking particularly bullish for me, right? You've got the Senko Span A under the Senko Span B, so no on that one. KKR on the weekly chart is inside the cloud, so no on that one. Daily chart under the moving averages, no. What about SLB? Schlumberger, energy sector. On the daily chart, it doesn't look terrible because it just popped above the cloud, but you'll notice the Senko Span A is under Senko Span B. That's bearish. It's still under that declining 200-day moving average, so it's probably going to hit its head there pretty soon. It's only about 3.5% away from the 200-day. And then if we look at the weekly chart, we're still under the Kijinsen, under the cloud. No on that one. So you can see, like, all the stocks they talked about, I would not recommend, all right? Except for one, SYF. All right, how about Tesla? No. Why? It's inside the Ichimoku cloud on the weekly chart. On the daily chart, it is showing strength. It has had some strength. It was down, though, today, 1.04%. Apple looks good on the daily, up 0.90%, above the 200. But on the weekly, it's also stalling for the last 3 weeks. You can see that right there, 3 weeks in a row. 1, 2, 3, where it is stalling right at the top of the cloud. So I'd say no on that one too. What about Meta on the weekly chart? Looks pretty good. I mean, we are above that 747.90. We're above the Tenkinson. We're above the Kijinsen. The future cloud is bullish, right? Chiku span is above price. The white line there. We're above the 200. What about the daily though? Not so pretty yet. Okay, we've got a little decline. Once it got under the Tenkinson, it's been declining. It doesn't mean that if you have a position in Meta, you should be closing out your position here. You still have some support levels, all right? You get the 200, you get the cloud. It seems to be stalling right here at the Kijinsen, and it looks like it might even pop. It was up 0.50%. But what I'm suggesting here is that you don't add a new position until all of the elements are giving you a thumbs up, okay? Let's keep going. I'm going to show you guys some of the strongest sectors. I'm not going to go into all of them. Strong sectors and ETFs here, like XLB, for example, is looking pretty good. I've looked at the daily and the weekly. I can tell you that they're strong on the weekly chart as well. So XLB looks good. So does silver. Okay, up 1.51% today. GDXJ was down. That's the junior gold miners ETF. That was down 0.52, but it's a strong uptrend. I like it. Copper miners ETF, COPX, also looking good, up 0.95%. GDX, the gold miners ETF, looks good. XLC looks pretty good. Okay, bouncing off of that Tenkinson after it pulled back slightly. You can see that right here. It pulled back slightly and bounced. All right. What about SMH? Also still looking good. Up 0.41%. Above the cloud. Everything looks pretty good. XHB Home Builders has pulled back a little bit, but I want you to notice where it stalled, right? It stalled right at the Tenkan-sen, like it did here, and look what happened last time. It popped. All right, so it's a very strong level of support, the Tenkan-sen and the Kijun-sen. And so right now it seems like you can even see a little lower wick right there if you look closely. That means that the little buying happened towards the end of the day. We can switch that over to a 3-minute, and you can see that buying. There it is, okay? So this is a 3-minute chart. Around what time was it? Around 2:30 p.m., it started to take off. So I like this one. I think we might see a bounce tomorrow as well. All right, GLD looks good still. We're still stuck in this consolidation box, but you can see these last 5 days in a row, like we've been kind of moving up bullish candles. Industrials looks pretty good. I mean, it's kind of flat here, kind of stuck. But overall, the technicals still look good. Financials still look good too. It was only up 0.13 though. XLY looks good, up 0.17. We got a little bit of a reversal candle, but nothing to worry about. We're kind of close to the Tenkan-sen there. IJJ also looking good. It broke through that 129.17 level from that prior high, which was from July 10th. That happened on this candle here on August 22nd. And then you can see that price has been stalling above the 129.17, right? So it's testing it here, right? That support level. And so, yeah, I think it's going to probably continue to move up. This is the mid-cap 400 value ETF. And then we've got a couple of stocks from our members. Let's take a look at those. TXN, Texas Instruments. Let's look at the weekly chart first. It's above the Tenkan-sen. It's above the Kijun-sen. It's above the Ichimoku Cloud. I had a position in this one. Let's look at the daily chart so we can look at that trade. It was back on July 1st that I added it. Got out here on, what date was that? July 21st for just a 5.3% profit on that one. It did drop. The very next day, it kind of stayed under the Tenkan-sen, and it had a big drop there. So it dropped about around 15% or so, percent down. And now it's recovering. And it's above the Tenkan-sen. A lot of times you'll see this, right? Where price will find support after a breakdown. And, you know, I still hold some positions that have broken down a little bit. Why? Because as long as we've got some support levels, you can certainly do that. It's your prerogative. If you want to hold positions as long as they maintain above key support levels, you can do that, right? And so right now it's above the Tenkan-sen. It's above the Tenkan-sen. It's above the Kijun-sen. You can see we had a bullish crossover take place right there. The green line crossed above the red line. That's bullish. Price closed above the cloud for the first time today, even though it was down 0.67%. And let's look at the future cloud. Well, the future cloud still needs a little bit of work here, but the Chiku span, okay, where it was under yesterday, that's the white line, okay, it was under price because of the gap that happened between the two candles there. Now the Chiku span is actually above the candle. So that's a bullish situation. So we've got Chiku span above price. We've got price above the cloud. And it looks to me like the single span A is moving up slightly here. So it might cross over. And you can see the positive DI is still above the negative DI. So it's all looking pretty good. I like the TXN. I think it's got some potential. If we look at the weekly chart, we're still above the Tenkan-sen, Kijun-sen, and the bullish cloud. So you've got both of those. Therefore, it gets a flag. GILD on the weekly chart this week has pulled under the Tenkan-sen in the 9 period. And it looks like it's finding a little bit of resistance up at that 119.96 level, right? So that's from that prior high. Notice how it stalled. There's the first week, the second week, and the third week. And then it dropped today, this week, under it. But one positive thing that I'll note is that as it's declining, the volume is also declining. Okay, it's not increasing. So I think that it might be a short-lived little pullback. All right, I think once we come to the Kijun-sen, we might see a little bounce off of there. That's the weekly chart. Here's a daily. All right, and the ADX is just dropping. There's not a lot of momentum on this downside here. So I think once we come close to the cloud, we might see a, like we did over here, a bounce right there, or a bounce right there. Okay. So keep an eye out for that in the near future, in the next couple of candles. Let's see how GILD performs. It's still above the 200-day on the daily chart, and it's above the cloud. All right. Now, guys, if you guys like this software, if you want to be able to check out stocks like I do, it's not that difficult. It takes a little while to get used to the, playing around with the different columns. You can move these around and make the chart the way you want. You can put 4 to 5 charts on one panel if you want to. There's a whole bunch of things you can do with this. Let me show you something else that's kind of cool about this. Let's look at the fundamentals here. Check this out. I've never showed you guys this, I don't think. Let's say that you wanted to look at the fundamentals of a company at the same time as you're looking at the stock and chart. Okay, check this out. Look at all the stuff that you can find over here. All the different ratios, income. You get total assets. It's got gross margins, the PE ratio, trailing. There it is. All that stuff. Price to sales ratio. So you can add those there. You can move that around. You can change it. You can add what you want at the top of a chart like I have. You can see over here, for example, I placed the earnings announcement right there. I put the beta. And how do you do that? You just right click, okay, here, and you hit the edit toolbar. And then there they are. Okay, you can hit the plus sign, and then you can pick whatever you want. Any of these fundamental things here, right? And options. A lot of them in there. You can, there's just a lot of options. And let me get rid of that. Whoops, delete that row. Yes. Okay. What else can you do? You can create alerts. So let's say with GILD, let's say that you want to buy the stock eventually. Well, you might want to wait until, for example, it comes back to that 119.96 and maybe crosses it and closes above it. So how can you do that? Well, you can right click on this line here and hit the set alert. Okay? And basically you can type in here. So like it says here, GILD, when it crosses this line, it will create an alert. And you can have a default notification setting of getting a text message, an email, or even a pop-up while you're on the software itself. Okay? So if you can trade this, you can day trade this if you want to. Here's the 1 minute chart. You can use Ichimoku on any time frame. All right. There's the 1 minute. Here's the 3 minute. Okay. 15. You can add whatever time frame that you want. You can see all the different time frames that you can select. Edit the time frame settings. If you'd like the software, it's real easy to get this and get a $25 coupon for it. In order to do that, you go right next to this link where it was to join, to become a member. You click on 9 more links right here. You can read a little bit about my channel and then scroll down. Okay, and there's a bunch of links here. Check them out. But the $25 coupon for TC2000 is right here. Just click on that, enter your email. You can download the software. Here's the pricing information over here, software plans and data. I would recommend that you go with the premium versus the basic because you'll be able to draw on the charts. If you want the chart drawing tools, if you want to create alerts, you'll have to have this premium level, which is like $49.99 a month. If you pay for it biannually, once every 2 years, it drops the price down to $37.49 a month. You can see how it changes the prices for all these different things. And then premium has some other features here. If you're into 1,000 alerts, okay, real-time market pulse gauges, live auto refreshing filters and sorts. So if you're day trading, that can be very useful. Intraday performance columns. See how quickly a stock performed throughout the day, or to see filtered or sorted stocks from earlier. All right, and if you want real-time U.S. indices, you can be built for other stuff as well. Anyway, that's it for this video. Thanks for watching. I appreciate all of you. Don't forget to like, subscribe, so that we can get this to more people. I'm trying to get people to learn about Ichimoku, learn a little bit more about trading. Let's not just buy stocks and cross our fingers. Let's have a game plan, right? Have a strategy, have some rules when you decide to add or close out of a position. And guess what? Your trading will become better as a result of that. Let's take the emotions out, okay, and use logic. All right. Talk to you guys later.